Hi, Warriors. Good turnaround Tuesday. How you doing, Patrick and Bran and Michael Bergman, Sinatra, Michael Weissman, Ryan? Welcome back. Hope you had a good time.
Thanks,
Got
Dale.
refreshed. How are you, buddy?
All good, mate. All good.
Okay, so
yeah, welcome back, Ryan.
Thank you very much, mate.
And guess what? Welcome back, Steve. Dale, Steve is here.
Oh my gosh.
I know we got all these holiday people coming back.
Special day for Euro and cable to be showing a little bit of strength there today. I all of a sudden I don't have prices in my scale on a few different markets. I don't know how that happened, but you know how to correct that, Blake?
I don't. You can
Weird.
Well, first of all, you'd have to replace all the ones off to the right.
Yeah.
That means the data is sources down. Where?
Right here.
What's this?
Oh, well, my cursor to the left where prices show up on the scale.
Yeah, I don't know why your scale isn't showing up. You might have right click and you need to show it, but something we can try to deal with after the show.
Anyway,
Just
yeah.
refresh
So
the page.
What's that?
Just refresh the page.
Just refresh, huh? That's a Steve.
That's a Steve fix. That might work.
See what happens.
Drum roll.
Look at that. That's Steve. Let's see. Well, I had it for the end. Let's see if I have it now. So good to have Steve back. Nope. That's not it. Anyway, Brian, so welcome back. You know, the end just keeps grinding higher. I actually have had a 1.618 of I don't know what at 45.36. Anyway, that number popped. Do you have any numbers up here that are important, or are we going back to 48, 49 before this is over? I know yields are on the verge of making some, taking out that last high that we had.
Yeah.
422 last, yeah. So, we've taken this 420 out.
Yeah, we've potentially got some clear space to the big figure 146, and some of the levels that we moved off that prior high in the 151s, 146, 70, 80-ish around there. Then we get into some older levels of the traffic zone after that move from the 150s. So it's going to be plenty up here, but if this break holds, which it looks like it's doing, it should create a decent leg higher, because there's not a lot that can stop this at the moment.
Yeah, unless we're going back towards the 152 level, right? Because so
could be a possibility.
We are diverging. We are diverging here, but
yeah,
not
much.
We're
back in that zone where we've got to keep an ear to the ground on what the officials say. We're at low DEFCON levels. They're talking about can take action if necessary, watching markets with urgency. But if they start getting into throwing the speculation words around, then that's a big step up towards intervention again. But they'll be looking at this very carefully.
We'll keep an eye on this breakout that we had in the dollar, because I think it's going to be tested and negated. We'll see what happens if where it's going to take it. I suspect, we took out the top of this range, so take out the bottom of this range. Maybe we get a breakdown to 101.5 and euro rallies back towards blank price up here.
Yeah,
110.5. A lot challenges this anyway. Why did S&Ps take a hit overnight? Anyone know?
I don't know. A lot of Chinese markets, not looking too good again. Yeah, the old China excuse. You can throw that at a lot of things at the moment.
We'll look at copper after the breakdown.
Yeah.
So we've taken out lows from the summer.
Soft industrial production data or missing expectations in China. That's part of the reason for that one. Did you see your TLT news?
No, what is it?
I don't know if you saw that news that last week investors took out a record 1.8 billion in TLT last week.
What do you mean, outflows?
Yeah.
Okay, yeah, it looks like it's you know, in Niagara Falls right now.
Yeah.
And you know, I think we're gonna gun. Look at this. It looks like it just wants to get, you know, parabolic waterfall type of decline to, I think that they're gunning for that October low. Yeah, we're going to come in about 60 lower. It looks like, you know, the last capitulation move maybe in the bonds to the downside here, but they don't look good. I'm glad I'm not long. Afraid to be short because of what everyone's talking about, that everyone's on that side of the boat, but it certainly hasn't hurt them. I think what else is interesting is crude's starting to look uglier to me. You know, everyone's, you know, got real bullish on this breakout, but we really didn't do that much. All we did was get back to, you know, a prior high that it got smashed on right back here, and had a little 3 drive here. I'm looking for about 76 to be a battleground for crude. So everything looks heavy except
broke
cable.
one high, hit another, didn't it?
Yeah, cable looks like it wants to rally. Maybe back to 29 or 30, but you know what? I hope it does, because I think that we'll have a real nice setup here. Now, you know, I don't know if you want to call it, you know, head and shoulders, you know, there's a neckline, but I'd love to see a right shoulder develop, take out this high like ABC, you know, trade 29 or so. And then the breakdown here is going to give you 21. So
yeah, I think 128.5 is going to be your level. It starts from around the 20s, 25s, but I think 128.50, if it holds that, you might get your Quasimodo.
Yeah, Quasimodo top. Yeah. So anyway, that's a pretty clean formation. It's cleaner than Euro because you don't have a straight line, but you still could draw something and say that's an important, you know, very important level that we held yesterday, higher low than what we had here. Kind of looks similar, doesn't it? So, you know, give me a rally, give me a pullback in the dollar, negate the breakout, and give me a rally. And I'd love to short, you know, Euro back at maybe, you know, 110.5 or so. Anyway, that's what I'm looking for currency wise. I still think they're going to put in some type of just bear market rally in the metals. Gold may as well move to Stell. Is this a breakdown yet?
Stelios is not here. I think he's at the beach. It's a Greek holiday today.
Oh, okay. All right.
That's why Steve came back. He came back from his holiday so he could go on holiday.
Okay. So,
right.
yeah, you guys are on rotation holiday. Steve, view on gold and metals in general? I know your long-term bias. Do you think we'll be able to buy these cheaper, buddy?
There is good morning, by the way. There is a
Good
chance
morning.
both metals are testing more or less the previous lows, meaning the June end of June lows. So it definitely looks like they might produce more downside, although I wouldn't be selling them exactly here because we are at support in both cases. Right?
Yeah.
But it definitely looks like a possibility to see lower levels, to see gold towards 1865, for example, and to see silver towards 21.5, 21.70.
Okay, you have a little wedge line coming in at 21. I think there may be an intermittent rally with the dollar coming off. If the dollar comes off, like I think it will. And
yeah, the dollar found resistance.
Yeah.
Friday at the 200 daily moving average, dollar index, and there is also a descending channel that was just a little bit higher than 103.60. So in general, against these levels, I think the risk reward is now in favor of looking for a pullback in the case of the dollar. So I agree with you.
Okay, so what would be the preferred short? Would it be euro? Would it be cable? Or would it be the weak commodity currencies like Aussie down with the other ones up today?
Speaking of the Aussie, for example, the Aussie tested yesterday and is testing again today as we speak. The previous low at 64.50.
Blake showed it as a real major support going real far left yesterday.
Yes. So, yeah, for example, a breakdown from there opens a lot more downside for the Aussie. The commodity currencies in general have been weak for quite some time. So, yeah, why not? Kiwi has already broken through the previous low at 59.85. It already
When's the
did so on Friday.
RBNZ meeting this week?
Tomorrow.
I have
Tomorrow?
Yeah, yeah, it's Wednesday morning.
Coming up.
It's tonight for us, Dale.
Okay, all right.
Yeah.
Okay, so and it'll affect the Aussie, whatever they do. So, you know, I was thinking the Aussie was gonna give us like 150 pip pop. That could happen, or it could all fall apart, because if you see this and you see this, I'll give it the ultimate compliment. I wouldn't short it here. So let's bring Kman into this. K, what are your eyeballs on today?
Good morning, everybody. Good morning, Dale.
Morning.
Well, we've got the US retail sales out, which is our next little test for the dollar, and the Canadian CPI, which is going to be a big test, I think, for the dollar CAD, looking at the levels we are at. So I'm really watching the CAD, and I think sterling is relatively neutral here versus the dollar, same as the euro, but the antipodians are weak. I'm a little long sterling against both of them, but I think the Canada could be one that takes center stage again today if we don't get the beat in CPI that the market is expecting. It looks vulnerable, the Canadian dollar. Also with oils continuously rejecting that 82.5, 83.5 zone, that could be one to keep a close eye on. And unless we get really good data out of the US, I'm starting to think, with everything that's going on in China, with let's call it climate, because the Panama Canal is now drying out as well, I hear. I'm not a big fan of risk today. I'm not saying it's going to collapse, but I could see a difficult day for risk today.
Okay. So
that's my global view.
Yeah, and good morning, Kman. I think
by the way, regarding the dollar yen, I think we need to keep a very close eye on what's going on in the mid 146s. There's a lot of not only technical but psychological importance there as well.
Good morning, Kman. I was going to say the one thing about this dollar CAD, not only do we have the inflation data, as you mentioned, but this breakdown in crude is pretty big. This is a trend line that's kept crude in check, the bears in check, at least for the literally for the last couple months since June, and so we're now starting to break down, and that I think is going to weigh on the Canadian, because it's like crude oil hasn't had an effect as it's been bullish. It hasn't had a bullish effect on the Canadian dollar, but when it rolls over like it is today, now it's starting to have a negative effect on the Canadian, just because everybody buying Canadian dollars with strong crudes just hasn't been getting paid. So
yeah, definitely looks heavy. The 3 drive did work. Still short some, looking for this. One of our guests last week, Blake, said that he uses he likes the correlation between Canada and the VIX. and says he's using Canada kind of like we used to, as risk off currency. When it's heading up, it's risk off. It puts pressure on the market and correlates. He put up a Canada and VIX chart, and they were pretty close.
Come on, Dale. That's something that we've done for the last 7 years, silly.
I didn't compare it to
Come on. But yes, the VIX and the dollar CAD they have a very, very strong correlation during risk off. Yes.
Yeah. All right.
Absolutely.
Anyway.
Come on, Dale. Come on. You're forgetting stuff now.
The dementia.
That's not good. You've always been a sponge head. Sponge brain.
Well, I still think the metals are going to pop, and that implies that I think the end is close. I'm not just for a trade. I mean, I think it's counter trend. Rally back to 1940, and silver could rally back to 3.5 to 4. It would just be normal, because look how they've been grinding and not confirming here. I think turnaround Tuesday is a good day to buy metals. In my view. I already did it yesterday in silver. I'm underwater.
Okay. Well, I'm gonna take the screen if you don't mind.
All right. No.
I gotta talk to Kman, Ryan, Steve. You guys have been up a little bit longer than Dale and myself this morning. Japanese data came in last night. The GDP data was strong, and now I can't remember a time. Now inflation data has started to move the needle a little bit, but it's been I don't even know when, since the last time that we saw Japanese data actually move the market. But the GDP numbers, I don't think we can really ignore those, right? I mean, if you look at it here, let me just, oops, I didn't mean to do that. Let's pull this back over here so you can see Japanese GDP data last night. I mean, that's an industrial production. Those are some pretty average earning. Or no, that was UK. Where's the there we go. There's the GDP data. I mean, that's strong. What do you guys make of that? And do you think it's going to start affecting the yen here?
No,
it should have an effect. It should have an effect. Over time, if this type of data keep coming up. Personally, which doesn't really matter for the market, but personally, I think that the vast majority of the gains in GDP data we see is because of higher inflation and understated higher inflation, which of course, has an effect of boosting the GDP. But of course, the market, doesn't think about that, so that won't play a role. Now, the overall effect is going to be with expectations having to do with monetary policy in Japan. But one piece of data, I don't think it's going to be enough. It's something though that should be taken into account going forward.
It hasn't been one piece of data. It's been Japanese data is continuously beating to the upside.
Yes,
for a lot of data points. Maybe not so much inflation, even though they feel that inflation is beyond their target, but still it's kind of coming in below like analyst expectations. But still, let me go ahead, Ryan.
What you're missing from that data, GDP data, is that capex was flat, was expected to rise 0.4%, so businesses aren't splashing out, and consumption was down 0.5%. So, the data looks good on the surface, but there's still some worries if you look at the data details. So it's not the whole it looks on the face of it.
Okay. Thanks for that explanation. And with the industrial production numbers, those are pretty strong also overnight. But let me ask Kman this. Are you surprised that we haven't heard anything from the BOJ or the Ministry of Finance at this point?
We have 2 of them. Suzuki and Kman were out overnight.
Was that overnight? See, this is the problem with me getting up and trying to read everything. So what were the comments?
Well, they were saying that they are watching it with a sense of urgency, that the market should move in line with fundamentals. The usual thing, 1 or 2 notches below red alert for interventions. So, but the other thing that is significant, I think, is that we are very close to the levels in the trade weighted index in the yen of when they intervene. So that is as well why I'm saying that we should start to pay attention, because it's not only dollar yen going up, but if you look at the euro yen, sterling yen, and etc., it's those things are actually higher than where we were over the interventions, if I'm not mistaken. So we have to be a bit careful now with going forward, especially if the yen would weaken on its own. Like for instance, if you would have some risk off and the yen still continues to weaken, that perhaps would ring some alarm bells over there. Yeah, so I think in the next big figure dollar yen, we should be a bit paying attention. But yeah, as we already said on the flow show as well, the GDP was mainly driven by exports, mainly driven also, well, partially, as Steve already said, driven by inflation and the lower yen. But yeah, there's still the industrial production is a real yo-yo. That thing goes down 2.5–3% one month and then jumps 3% the next month. But the capex and the personal consumption are not really good. Already seen that in Japan, the yields are not even at 1%, but they're already upping their savings again, and the Japanese whales are already piling into the longer end of the curve again. I mean, if you look at it from that angle, I would say I would not buy yen on what's on the numbers that came out overnight. Personally, I won't.
Got it. But we are at, you know, some critical support, and we are at, as you pointed out, last time that the BOJ did intervene, or the Ministry of Finance, or intervention levels were hit, we're at these levels. So that's why we need to be real cognizant of where we're at right now. So good eye there. And yeah, and the dollar Japanese yen, you know, we pointed that out too on the week ahead video, or yeah, the week ahead video, that we're basically there as well. So really important levels here. So thank you very much for the explanation, Kman. You look, when we got the dollar CAD, I want to just make sure I point out to everybody, the dollar CAD is back up against the 135 level. And when you have crude oil, and this is something I mentioned just a minute ago briefly, crude oil is finally breaking down through this support that has held us for the, you know, since June. You can see it's actually breaking lower. Now, once we start making, if we start making, I shouldn't say once, if we start breaking lower lows, which would be 79.80 on this CFD here. So basically $80 is where you need to be looking. We start breaking below lower lows, and then that's going to probably put a little giddy up in the dollar CAD. Now, one thing I want to point out about price action in dollar CAD, you notice how pullbacks have been very minor. Breakout points have been respected. And so the reason why that's so important is it's not giving shorts anywhere to exit. And for those people that want to be long the dollar CAD, it's not giving them entry points either. So, you know, that forces FOMO at some point, which I think today, especially if you get, you know, a weaker Canadian CPI data, because disinflation has been kind of the theme globally, right? So if Canadian inflation comes in a little lighter than expected, especially, you know, with them dealing with fires, you know, who knows how that's going to impact, you know, Canadian inflation moving forward. Yeah, I think you could argue either point really, but if we break 135, the next stop would be 135.70, which is the 618 retracement of this entire channel, which, you know, then starts bringing us up to channel resistance. One thing I want to also point out with the dollar CAD, which, you know, I discussed with the week ahead video, you look at the dollar CAD, it's really, you know, long term, we're really sideways. And you know, if you think about that, you know, you look at, you know, price action over the last 5 years or so, I mean, it wouldn't surprise me to see the dollar CAD back up in the mid 140s. I mean, you know, just to be in a range. So I think there's a lot of upside here if we get a breakout, especially the distance that crude has traveled. And Dale, going back to the correlation that we've been watching for 1,000 years, Dale, like literally since the beginning of time that we've been doing shows together. Now I'm harassing you. Yeah, VIX and the dollar CAD have a very strong correlation, especially during periods of stress. You'll see those spikes that you see in VIX. All you have to do is match up the dollar CAD, and you're going to see that those spikes higher in VIX do equate to spikes in the dollar CAD typically. So anyway.
Okay. And you know, if you're looking for 145, that should translate into God. I think at least a 15 VIX.
Yeah. Well, you know, I think VIX,
I mean,
you really
funny.
got to start, you know, being a little bit concerned if it starts getting in the upper teens above 20. You know, that's where I think people need to be really like, okay, you know, do I need to start buying yen here? Do I need to start, you know, selling Aussie dollars? I mean, look at the Aussie. This thing can't even get out of its own way. I know we had Australian wage data last night that looked, it was horrible. And by the way, UK inflation or UK jobs data came in strong. Ryan, talk about that. I mean, you guys had some good strong price pressures too.
Yeah, as expected, some of the pay disputes from the NHS filtering through into that, giving a strong uplift to wages in the public sector, and also there were strong readings in the private sector, and that's going to influence the Bank of England more than any other thing. Big uplifts in pay in manufacturing and financials. So yeah, it keeps the jobs data overall wasn't all that. Unemployment rate went up, claims went up, but it's the wages that are going to put some of the pressure on.
Yeah, 8.2% versus 7.3% expected. I mean, that's a big jump. So the cable, you know, obviously is holding the 618 retracement. Yesterday we went and tagged it again, like literally, you know, you can see that real big support holding. But I have to also point out, I would have thought that we would have got a big bounce today after that data that we got overnight. And I think the risk is starting to build. If we break 126, it's going to open up some downside. We could see, you know, this channel continue to play out. You can see it right here. You can see maybe a move back down to 125. And then remember, 124.80 is like the big kahuna. That's the big breakout point where, you know, that breaks. I don't know where the sterling is going to go, but the euro's trading heavy, Aussie's trading heavy, the Kiwis in like, you know, elevator shaft zone. You know, this is like a level where you can really just start opening up some downside. So pretty big moves here. Okay, we have retail sales. Let's start. Kman, what do you think for retail sales? Do you bet against the U.S. consumer today?
I don't know. I mean, retail sales will, but to be honest, for me, retail sales will come out what they are. But if they beat, yeah, then just continuation of the dollar, probably send yields higher, and for choice, an attack of the S&P on the 4440 perhaps. But I mean, therefore they should not be too strong, of course.
Speaking of yields, Dale, look at us flirting with those lows. I mean, that's scary, right? I mean, yields look like they're just going to rip higher. I mean,
it's not even a treasury issuance this week.
Yeah, I mean, that's crazy. And hey, didn't we get wasn't there some headlines about, well, we need more time. Headlines about like Moody's and Fitch threatening to downgrade some banks now. That just came out like over the last couple hours. Anyway,
quickly, Blake.
Go ahead, Ryan.
I don't know if you remember last time retail sales, they dropped in bits and pieces. It wasn't all out at once, and the headline number went lower and the dollar got sold, and then the control group came out higher and we got balled up. So you need to watch carefully these numbers. Wait for that control group as well as the headline number, because that flipped the dollar around last month.
Very good. Okay, we have dollar index to the left, S&P right in the middle. You can see, let me put this down like this. You can see yields down here. We're going to have data flash. This comes with ForexAnalytix. We have about 20 seconds before the data comes out. So we're going to see the instant reaction. Also keep an eye on the CAD. Obviously we have Canadian inflation data. So watch that, see if the dollar CAD takes out 135. with wheat crude, and see if that inflation data comes in a little bit disinflationary. We'll see. Heads up, data coming out. Canadian CPI hotter than expected. Wow. Look
Retail
at that.
sales hot all the way along.
Wow, look at that. So I wonder if you fade the dollar CAD with stronger inflation data, or even though there's stronger inflation data, that's strong retail sales data. Look at that. Hot is right. I wonder if stocks are going to like that. Look at dollar index just ripping here. Yields are flying. Wow. And
Dollar CAD's caught in between both.
yeah, it is. It's like everybody wants to sell dollar CAD because of the inflation data, but look at the, with yields and dollar breaking out. I don't know. That's some pretty
Empire
strong.
looks bad as well, though, down 19 versus down 1 expected.
Watch the Aussie, the Kiwi. I mean, we are like threatening some pretty big breakdown areas here. Look at the Aussie. I mean, that thing couldn't get out of its own way last night, and we start breaking down. And Dale, here's that long-term trend line that you were discussing.
Okay.
That's
Not
from
quite
the
there.
that we're 64 cents is where it comes in. So we break 64 cents, and woo, that could be ugly, because this, if you look at it like longer term, let's just kind of zoom that out. That's a big triangle, right? It tends to go in the direction of the trend is where they tend to break. And I think if you look at the overarching trend with the Aussie dollar, I think we could all argue or agree, that is trending lower. So a break lower wouldn't surprise us in the least bit. So anyway, big moves in currencies today. Hopefully you guys are staying on the right side, especially with the dollar. I want to say, Steve, welcome back. It's nice. I know you're probably not excited to be back, but welcome back.
Thank you.
Yeah. And Ryan, I hope paddleboarding with your kids went well.
Yeah, thank you very much, mate.
It's funny, not funny, but my one of my really good friends, he was paddleboarding with his kid. Some dog, which was with another group. It was a pit bull. Ran up, he was like in the water, getting his paddleboard ready, ran up and just bit my buddy's leg. And my buddy like shook off the dog and, talked to the people. And then he ended up going to the hospital because they ended up getting infected in his blood. And so it's like, It's like one of those paddleboarding things that went wrong. It's like, holy cow, how's that happen? Anyway, it has nothing to do with
There's
anything.
worse areas a dog can bite.
Yeah, yes, this is true. It happened to be the back of his calf. Could have been the Cajones. Anyway, Kman, great job filling in for Ryan the last week or so when he was out. So, and Dale, I know you have an interview coming up. So you guys have a great trading session. And thanks everybody for joining us today.
Thanks, all.
Nice to be back at full strength, team. Glad to have you back, Ryan. Thank you,
Cheers,
Kman. Thank you, Steve. Thank you, Blake. Welcome back, Fabi Lara. How are you?
Hello, Dale. It's nice to see you again. It's been a while.
Yeah, it's nice to see you too. And I get your emails. I signed up, for the free letter, of course.
The next big rush.
I'm just another, the next big rush. And there you always have something going on. And there are a lot of things that companies that you mentioned that people would need a pro like you to be able to find and do due diligence. So uranium's been acting real well.
It has, and if they need a pro like me, though, I think they're in trouble. So
Okay.
let's start off with saying I'm just an investor. Yes, I do work in the industry. I currently help companies with marketing and the such, and I do have a free daily newsletter at thenextbigrush.com, which means that I live in the underworld of the money investing industry and community, and I get exposed to a lot of the news because I have to report it daily. So I get to see a lot of the movements. I get to see a lot of the sentiment. And I think I can sometimes gauge, where people are heading, where institutions are putting their money towards. And it helps a lot of the times. And a lot of the times it's almost too much, right? A lot of the time it's like, there so much is happening all at once. So uranium is one of the things that I really like to talk about. And by the way, thank you very much for having me on. I think it was in April or May. People started to follow me, and I could tell that these people who follow you and the show, they were of a very special intellectual class, which really helps the conversation. It really helps to, push the ideas around and have good conversations about our different theses and what's going on and what's not.
I've been very impressed, Fabi, with how well uranium shares have held up when we had that period of risk off a few weeks ago.
Absolutely.
Sometimes a stock is a stock, and it doesn't matter what it is when you have general market sell-offs. And I like to see how things act when they're tested.
Yep, absolutely.
And the uranium's acted pretty well, the shares have.
Yeah, so a couple of things have been happening with uranium right now that I'd like to bring to your attention. One is that we can't run away from risk when we're talking about mining, right? And so we're talking here political risk, we're talking environmental risk, economic risk of all sorts. And I think it was about 10 days ago, there was a coup in Niger. Now, Niger it's between the 6th and 5th largest producer of uranium in the world. So you have, the French giant Orano there. You have a couple of other, medium-sized projects there. And, I think only 2 very small companies, very early stage companies in Niger. But the French do produce a lot from it. The resource is there, right? And it is a really important part of their economy. Now, when the coup
fear
happened,
is that they might nationalize the mines?
There are obviously fears that might happen, and the effect has been twofold. One is that the companies involved in Niger had a massive drop. You can, take a look at them. I'll give you a couple of names. So if you take I'll give you the main one, which was previously beloved by the uranium community because they do have the goods. It's a high grade deposit, and it was very, very close to coming into production. According to them, things are still moving forward, but obviously the timelines have completely shifted. It's called Global Atomic. Okay, so Global Atomic was the company that everybody was making bets regarding coming into production very quickly. And the government was very pro-uranium. They had all the deals signed, everything where it was going 100%.
Is it atomic
GLO.
with an O?
GLO is a symbol. Global Atomic. GLO is a symbol. And then this happens. The company itself completely crashed price-wise, but that kind of gave the rest of the market a feeling of there's trouble in Niger, therefore the rest of the world, the rest of the world could do well uranium-wise, because Niger might be out of commission for a while, right? And so that actually helped the other equities to maintain a decent level while the one company was, taking it all. And there are a couple of other companies as well, but this was the one that suffered the most, Global Atomic.
What was the hit, 50% or so?
I think about that top to bottom. It's not, I think it's trading sideways now, but it was.
It's been in a car crash, and after you have those kind of moves, it breaks the stock. And
they were just about to get financing as well for the last portion of the mine, and so that was, I
feel bad for the shareholders.
A great punch to the stomach. And I had the privilege of meeting the CEO personally. Really straight shooter, really nice gentleman, trying to do the right thing, but there's things that you can't control. So that has been really negative for some shareholders, generally positive for the other, for the general market.
I can imagine with what President Biden did at the Grand Canyon a week or so ago was positive for the sector, meaning he's not going to allow any mining in the Grand Canyon. There already are uranium mines there, aren't there?
So there are uranium resources and projects that are close enough for the local communities to be
safe,
weary, right?
Oh,
So I think with that in particular, they weren't going to go ahead anyway because of the locos. And so I don't think that it makes a massive difference right now, because I don't think those mines were going to come into production anytime soon anyway. And when we talk about anytime soon in mining, we're talking.
So it just made them look good to the
Yeah,
Greens.
I think it was more of a
good
political
PR.
move. Yeah, exactly,
all right.
exactly.
You're not going to be able to do what we're not letting you do anyway.
Politics
For
is
sure.
politics. That never
Yeah.
changes, Dale. You know that. But another thing that is happening to the uranium market is that you're seeing more and more restarts and extensions. Now, why is this important? When I run a nuclear power plant, I am planning things out 5 to 10 years in advance. And so I have fuel today and I have purchases today because I'm looking well into the future. It's not a matter of, how much uranium we need. It's just, we always need uranium, right? And
it's not just
how
in time delivery.
Absolutely
you
not.
Run it. Yeah, you can't
be.
run a power plant that way.
It cannot be. And you also don't have the fragility that, for example, copper has as a commodity, that you might be able to use aluminum for certain types of uses. It's like there's only uranium and that's it. You can't use anything else for your fuel. And so there's always this need. But if you look at any sort of uranium analysts and projections, demand and supply curves, people always had this notion that a few dozen plants were going to be decommissioned. I want to say from 2 years ago to the next 15 years. And so there was this big cliff of, power plants that weren't going to be producing any longer because they were quite old. Some of these have been built in the 50s and 60s up to the 80s. And so maybe if they're not maintained and they're not modernized, they become very, very expensive. And so therefore, governments start using a different energy mix, and they try to implement wind and solar to close that gap. We've been finding.
Do you think it was a good idea, Fabi, for them to close San Onofre in California, since it's right on a major fault line?
You will never know.
Or was it just too old?
We'll never know. We'll never know the real risk of what could have happened. Yeah. But when it comes to energy security, my thinking is always it's better to have plenty than try to do the political thing and try to go for the so-called green alternative and then realize you can't really make ends meet energy-wise. Energy is a very, very serious topic. There is basically no wealth in any country without massive energy generation, and that energy needs to be cheap enough in order for the population to be able to produce. And so, it's a case-by-case basis. But
do you worry about our grid, Fabi?
I worry about most countries' grid, to be completely honest, because there is this notion that green energy is going to replace what we used to do in the old days, call it nuclear and fossil fuels. And the reality is, I don't think that people understand the difference between energy capacity and actual energy generation, right? So when you have a solar panel, there is a certain capacity that solar panel can produce, but sometimes it's not sunny. And a lot of the times it can't capture all of the sun that it's being directed at it, and it can't store it in a great way in order to make it work. Most so with wind, right? The big problem with wind, one of the big problems with wind, is the inability that we have to store that energy when it's really windy. And when it's not windy, we don't have enough energy generation. And so having nuclear as base load power for me is essential in any energy mix whatsoever. Like, you cannot afford to maybe have enough energy for your community, because
are the Republicans more nuclear power plant friendly than the Democrats?
I would have said 3 years ago, even yes. Today, I would say yes, but with a slight advantage. I think that the Democrats are coming around to the new technologies, and to the actual numbers, that that we need more electricity than what we previously thought. Therefore, we must, go back to what already works. We need to go back to nuclear and other things. And so one surprising thing about the Biden administration is that everybody in the nuclear camp expected Trump to be super pro-nuclear. And we were thinking, hey, all the mines are going to come back up. This is going to be like, a massive 4th of July party. And it was actually quite timid, the way that the Department of Energy moved towards nuclear. Now, with the Biden administration, they have actually been a lot more vocal, and it's become a bipartisan issue where both sides of the aisle are saying, look, we're all for more energy in general, and we're all for more nuclear, which is actually really, really positive. I think it's a move towards, the right direction. But going back to the point of, okay, so we have now a restart or, a cancellation of a nuclear phase out. It means that if I run a nuclear power plant, I need to get material in now because somebody has just signed a document that has approved an extension to my power plant that was previously unplanned. So I've been, working off stockpiles and, nuclear fuel that was due to end. And you don't want to sit on, a couple of years of nuclear fuel just in case, but you're not going to sit on 8 years worth of nuclear fuel. That's not normal. Only the Japanese think that far ahead. But what that means is that I must go back to the market now because of this unplanned extension, and I must buy material now. And so the actual price has held very steadily, and it's actually climbing up a little bit, this week with just not a quiet summer. Utilities are coming to the table and they are procuring new material. And so things are going quite well when it comes to uranium.
Yeah,
and
I'll just pull up a chart so that people could see how well it's been acting. These are uranium prices right here. Sprott.
Yeah.
Is that the one you look at? You look at the
Sprott is one that I look at, but
and here's another
can
one,
act independently of the actual spot price. It is actually notoriously difficult to find good spot indicators. Most of them are 1 to 2 weeks old. I usually go to Numerco. Numerco is, a private company that provides some of that information. But there's not even charts, right? It's just a daily, here are the prices, here's the curve to December.
Like gold used to be a spot price.
That's exactly what it is. Yeah. If you go back 20 years to any commodity, this is what uranium is like right now.
Yeah. So it's been grinding higher.
Yeah.
Yeah. Okay.
Yeah, it has been. And I don't think that this is going to end so soon, because nobody that I talked to in the market even expected all of these extensions, which weren't included in any of our demand projections.
There's best of breed, Cameco, right?
Yeah, Cameco is doing really, really well. And this is a problem that we have with the uranium sector when it comes to the equities. You have Cameco, which is a producer, and you have Kazatomprom, which is the world's largest and lowest price producer. However, they are partly owned by the government of Kazakhstan. And so you have political risk there that you don't have with Cameco. And now with Cameco, you might have contractual risk that you don't have so much with Kazatomprom, because the way that Cameco prices their material doesn't always grab the whole of the move. They put limits to their pricing in the way that they sign their contracts. But it's what people know. It's what institutions know Cameco, and they love Cameco because it's in Canada. It's safe. They produce enough, and they actually now, they've merged with a big chunk of Westinghouse. So now they are getting more into the other steps in the nuclear fuel cycle. They're not just a miner with all the risks that miner have, but they also have a part of the downstream uranium production and nuclear fuel production, which is very important as well.
So they're like the Apple of
They are.
the uranium.
I know I'm going to get a lot of hate for, for saying this, but truth is, yes, they are. And there's a reason why they're moving before the others are moving.
So besides uranium, I've seen in your letter, you cover other metals. I think I
Yes,
saw something about nickel.
Yeah.
What else are you focused on besides uranium, and what's the story behind them? Are you a believer in a grand super cycle in commodities? And we haven't brought any mines. It's so difficult to get permitting to get to mine for anything.
Absolutely. So what's happening now is we see that countries that we call, the developing countries, India, China, most of Asia and Africa, people, when they go from a very basic economic status of poverty to having enough, the first thing they do is they buy more stuff, right? They don't buy more software. They go from riding a bicycle to riding a motorbike to driving a car to getting a bigger house, etc. So that shift, as long as it continues, then it's going to demand a lot more commodities of all types. Now, investing in mining has not been sexy whatsoever, so much so people who invest in commodities are known to be contrarians, and that's for a reason. We're up against everybody, right? We're not invested in, the fancy AI tech stuff. Well, I am personally, but it's not where my focus is.
Can they use AI in mining?
They can use AI in mining, but
or maybe making it more, say to AI, where's the best place for me to drill?
It has been helpful. I don't think it has been a massive game changer. So you have, as a comparison, the oil industry, right? There's so much money in the oil industry, and it's so much bigger that technology resources went into that market, that industry. And then, people invented fracking and different levels of fracking, different technologies, so that, the US quickly became a leader in oil production, where it was completely dependent on the Middle East in the past. That hasn't happened in mining. And so the finding of the mineral resources can be aided through AI, but it's still very, very slow. And it's very costly. I mean, we actually have to make the holes, drill the holes in the ground, and try to ascertain, depending on the type and grade of the deposit, how much we have there and if it's economic or not. And because you're doing that as time goes by, that all your numbers are off, because you're basing yourself of today's economics, but you're only going to produce in, 5 to 3 years when you come, to that stage.
And you don't know what the price of energy is going to be, and it's very energy intensive, right? So
very much so.
The price of oil has a dramatic effect on the bottom line.
Yeah, very much so. Now, here's something interesting that I have been looking at, and I'm probably going to, start shuffling the decks a little bit more to go towards this topic, which is nobody is excited about gold. I just ran, a poll on my Twitter, and it seems like people don't care about gold. They don't believe that gold is going to go much higher. They're excited about silver, copper, nickel, lithium, etc., even uranium.
Everything but gold.
Nobody cares about gold. And these are gold people, right? These are the gold bugs answering these questions. And everybody has
They're just so burned out
thrown
because
in
they've been in the shares.
Absolutely.
The underperformance of the shares, well, they have to be a big screaming buy then.
Now, here's the thing. You look at gold, and there are two things that are very interesting happening with gold. One is that there's M&A happening at the top, and there's M&A happening at the bottom. So financing right now is dire. I don't remember seeing companies so needy of cash and having such a hard time raising money in Vancouver, in Toronto, or wherever else. Australia is doing a little bit better. But if you look at the mining companies in general, especially the gold companies, very difficult for the tiny, tiny little companies. And some of them are just merging because they cannot keep the lights on. And you see a lot of mergers happening right at the top. So you have, Newmont and Newcrest merging to form the largest gold company in the world. You have Pan American, coming together and buying a bunch of different assets in different companies. And you have, this wave of M&A that you only see either at the bottom or at the top. But you look at any chart, right? You look at the GDX and the GDXJ, and you can tell like this doesn't look bubbly. This doesn't look like a top. And what you see is that in the middle, you have companies that are either small producers or that have proven resources in the ground, but are still, doing the studies or drilling more, making new discoveries. They're in that no man's land. And so I'm seeing a ton of opportunities now in companies that have gold resources that they're quite late stage. Exactly. Yeah. And so, from I believe, and I don't want to like misquote, but I believe that Orla Mining has proven up more ounces in the ground from, the time that we looked there at the peak. I think it was in October 2020 to now. So the story has gotten better and stronger, and the price has moved accordingly. So I see a lot of that happening in that space.
Do you know this one, Fabi?
That's the opportunity. B2 Gold. Yeah, B2 Gold is
been under a lot of pressure. Do you know why? I mean, it's acting worse than a majority of them.
I don't know why. I think they had a project in a funky jurisdiction that they wanted to get out of. Yeah.
Because that's Mali, I think.
And that can be a problem. Yes, absolutely can be a problem. I don't know if they've sold off or if they're still holding that, but that will definitely put a dent into your valuation. Okay. Now, it comes with risk, but everything in mining comes with a massive risk, and it's all cyclical. And yeah, that's where I see the opportunity, because when I see that people that are usually invested in gold not caring at all about gold, it kind of gets me more interested in, in their old love and their old passion. So I'm looking at some gold opportunities.
Yeah, I'm looking at just, one man's opinion, a little bounce in the gold, but I'm looking for about 1,800 gold in the next month or two. And I think it'll be GDX will take out the 27 level and maybe be able to buy it around 25. So I'm getting ready to back up the truck. So from what you're saying, people feel there's a lot more potential in silver, but you think there's more because it's so underowned and unloved in the golds.
Yeah, and there are a lot of companies in the gold space with a proven resource. There is, for example, this company called Montage Gold, and I'm not associated with them in any way, shape, or form, but I know that it has all the ingredients. Okay, they're in West Africa, but in a jurisdiction that's much safer than any of the countries we've previously mentioned. And Montage Gold has proven...
Symbol?
Good question. Let me check here. Montage. So Montage Gold is a company that has MAU. So they have a proven resource of over $1 billion in feasibility study. So feasibility study is the very last stage that you do, your economic study in order to be able to make a decision towards producing or not producing. Now, Montage Gold, if you can take a look at the market cap there, to me, it shows up as 103 million Canadian, right? These guys have a massive track record of success with this type of company.
They're fairly new too, aren't they?
Yes. And here's the crazy thing. So they launched during the pandemic, and they've been able to actually push the project forward from, resource to feasibility study, which is the latest, like the very last step before producing or before a production decision. They've done that through the pandemic, which to me is mind-boggling because these guys have done it before. So we're not talking about amateurs here. And their resource is today worth considerably more than $1 billion, and they're trading for 100 million. Now, that's the type of thing that you see in the gold market when people just don't care about it. Yeah. The other thing is that you have to take a look at what were the assumptions when the economic study was built, because I can put any sort of numbers there and make it seem like, my resource is worth more than $1 billion. But you have to look at, okay, what is the assumption they're making on what the price of gold is going to be by the time they extract and sell it? what's the price of oil going to be? Because that's a massive input. What are the current taxes in the country, and are they in a good enough position that you believe things are going to remain quite stable? So with all of that in mind, you look at people that have done it before in the mining industry. You see a company that is doing so poorly price wise, and the resources so rich. I mean, that's the gold market, right? That's the gold investing market.
Yeah, so that I think that's a very interesting thing that you brought up, gold being unloved, and how a lot of these issues are trading well underneath what you would call book value, right?
Yeah,
I mean,
absolutely,
way under book. So here's Fabi's site, and where you could sign up for the letter, and she has a lot of great. Look, she even checks
publishes
Fiji out,
every
so
day.
she could take a trip there. She
I've
covers something.
I've been telling this company, look, I'm available for a site visit. Book me up. I might take my husband with me, but I'm available.
All right. So anyway, Fabi, I think that people need to follow you, and at the minimum, get your letter to alert them to. I think you have a great eye and a great depth of knowledge in the industry. And you're right, it is difficult to do all the due diligence yourself, and to have experts and watchmen, people looking out for laying out the risk, so people know what the risk is, geographical and everything you said. Fabi's your gal for the next big rush.
Thank you. I
Which
appreciate it.
means a completely different thing to me than it did 30 years ago, the next big rush. So
I'm sure.
Anyway, Fabi, so great to have you back, and appreciate you letting us know about the gold, and that may even changes my narrative a little bit about leaning heavier into the silver miners, but giving gold miners maybe a heavier dose of my capital.
Why not?
So, all right. So Fabi, Lara, everyone, at the next big rush. Maybe you could strike a nice trade with what she's watching out there in the mineral section. Thank you so much, Fabi, for being back with us again and edifying our community.
No problem, Dale. Thank you so much for having me, and see you next time.
Yeah, we'll see you in the fall, Fabi. Fabi Lara, everyone, at the next big rush. That's a wrap for Turnaround Tuesday. Good luck to everyone the rest of the day. You could join the team in 13 minutes on the Morning Edge, and we'll see you tomorrow.